Just switching focus to those renewables, because you've been in the game of producing green energy for a couple of decades now, effectively trying to hit those carbon targets ahead of many other corporates that are quickly coming on board around these ESG principles. But if you strip out the sale of some of the business, if you strip out the vortex in the United States, how would you say the renewables business is tracking?
Hi, good morning, everyone. I think it's going well, quite frankly. I mean, we have a big ramp up in growth. We've added over 1.2 gigawatts of wind and solar net capacity over the last 12 months. And we have a very significant construction program of around 3.2 gigawatts, either deployed this first quarter or under construction for the rest of the year. So we continue to see a very strong growth in the renewables going forward. The first quarter was hit by the Texas event, even so it ended up being a relatively limited impact. I mean, it's an extraordinary one-off. And then since then, the wind factor has reverted back to normal. So we're quite comfortable with the way it's going.
You've gone to the market in recent times, 1.5 billion euros you've tapped the market for. Just give us a sense of just how strong appetite is for anything that has ESG put on the branding at this point, which your company very much does.
I mean, I think it's a huge driver in the market, and it certainly is for us. I mean, everything that is related with the decarbonization and the electrification of the sector is really helping push the sector forward. I mean, it's a major challenge for the sector. It's a major challenge for the various utilities. And I think we're very well placed in that sense. We went out, we did that 1.5 billion capital increase in EDPR. As a result, we've also been upgraded by S&P and Fitch to BBB, and Moody's given us a positive outlook. So that's a significant step, I think, also in getting a more solid balance sheet. And so we're the number 4 onshore player globally. And so we're well positioned, I think, to continue to move along in that sense. We've also been number 1 or number 2 in the Dow Jones Sustainability Index for the last 10 years. And we obviously continue to want to be a reference in the ESG sector. And I think that there is a lot of money, there is a lot of investors that are looking to do good and have a good business investment. And that's where we are.
Net debt up 7%, Miguel. Is that anything that investors should be concerned about, worried about at this stage in the cycle?
Not at all. That was relating to the fact that we'd done the capital increase. So we were waiting for the cash in. It actually came in only in April. So what we did was a proactive management of our working capital, given that cash to hold on balance sheet nowadays is actually expensive, or at least versus some of the alternatives. So we front-loaded some of the payments to CapEx providers, took that on debt. And then obviously in April, if you do the adjusted net debt, including the capital increase, there's actually a decrease in net debt. And we are certainly on track for a decrease in net debt over the year.
And can I ask you just what is the position with regard to the involvement in the business and the management decisions of China Three Gorges, the principal shareholder in the business?
So they have a 19% stake in the company. It's down significantly over the last couple of years. They sit on the supervisory board, but they have no position on the management. So we have a 2-tier board structure. There's an executive board, which is composed of 5 independent professionals linked to the company. So no involvement of China Three Gorges on that front. So they just sit on the supervisory board and follow the company like the rest. But I mean, we have a majority of independents on the board. And so in that sense, I think that also gives a lot of comfort to investors.